Hello, this is Jordan. This video is being recorded on Friday evening, June 2nd, 2023. Thank you so much for tuning in. In this video, we're going to recap the week in precious metals and talk about what is to come over the next week in the very short term. So getting right into it, before we get to the charts, I think one key is, we had the strong jobs report, or, what looked to be a strong jobs report. I don't want to argue about all that. The key is the market reaction, and the stock market pushed higher. It's clearly had this, I don't want to say a little breakout. I mean, maybe it's a significant breakout, but the stock market's moving higher. And so because of that, it's likely that more capital could be coming out of precious metals. I mean, the people that went into precious metals in the last couple months, that capital is still coming out. Stock market's breaking out. Stock market has been driven by only a few companies, but the fact that it's broken out, maybe you're going to start to see some capital move into these other places, and the market could push higher here in the short term. It's not something I personally would chase. I think you have to be very careful, but nevertheless, we're talking about the short term here, and so in the very short term, more capital could move into the stock market at the expense of precious metals and gold specifically, because when the stock market is doing well, yes, that hurts precious metals as a whole, but it hurts gold the most generally. So getting into the charts here, looking at gold, gold rallied up above 1980. You can see, look at the far right there in the candles, tested 2000 today as well as Thursday. So you can say it failed, especially after today and that nasty candle. So looking at that, again, that's a bearish engulfing candle. Gold closed at 969, or round up, we can say 1969, 60. So rounding up, that's 1970. Gold did bounce off the 100-day moving average. And so the bullish outcome would see gold come down and make a really bullish double bottom. Like it comes down and it tests the 100-day again, and then it slingshots higher and goes above 2,000. I don't think that scenario is likely. I would not bet on that, but I'm just putting it out there so we can cover all bases. That would be the bullish scenario. Now, the more bearish short-term scenario would obviously be gold comes back down, breaks below the 100-day. Maybe it has an initial bounce, around 1900 potentially. So looking at the other support levels, if we see another little leg lower here, the other support levels for gold would be 1900 and then call it 1880 or so. There is an open gap in early March, and you'll see this on the miners charts, and that comes into play. I think 1867, and then these are just two of the long-term moving averages. This is the 200-day and the 400-day. They're almost identical at 1841 or so. So those are moving up. We'll keep an eye on those. But I'm more sensing, or at least thinking that the real question for gold will be, if it comes lower, which I think it will, what kind of bounce is it going to have in the mid 1800s? That's where you have all the really strong support. And so, it's probably a little too early for me to speculate on what it does. Again, assuming it comes down and bounces from there. And again, to repeat myself, the other scenario would be you get a double bottom off the 100-day and a real slingshot higher above 2,000. Moving on to silver, you can see the resistance, the red line there, the resistance in the mid-24s. Silver traded up not quite to 24.20 this Friday morning. Maybe it could push a little bit higher here, but I'd be really surprised if it were able to push above that red line. I think if it tested in the next day or two, you'd probably get more selling. One good thing we can say is at least the candle in silver is not as bad as it is in gold with respect to today. So, in a relative sense, I guess that's more bullish for silver. But that doesn't mean silver is going to break above the red line here. Moving further out for silver, obviously the 200-day at $22 even or thereabouts is that's going to be the critical support. I apologize, I didn't put the horizontal lines in on this daily chart, but if we take a look at that, it would show you that there is support in the 20, 21, that sort of area. So the point there is, even if silver breaks below the 200-day, I mean, that could happen for a couple days, and if it comes down to in the 20s or just right below 21, hits that other support, you could get a short-term bounce from there. Obviously, again, I don't know if I said this, but yeah, we would prefer it bounced at the 200-day. Now, getting into the stocks, really no groundbreaking analysis, I would say, this week. I mean, coming into last week, stocks were really oversold. They've had a bounce. And, the one good thing you could say is the candles in the stocks they're not as bad as the candle in gold. I mean, the daily candle in gold was really nasty, and the stocks here, not quite as nasty. So, we had this rally for a couple days. To me, that's not quite enough for another leg lower. I think if the miners were to start, and maybe this will contradict my gold analysis a little bit, but you're looking at GDX. Yes, GDX could roll over, but it could test the 200-day there, just below 29, and maybe have a better bounce from the 200-day. Of course, that would be a little bit more of a sell-off. Same thing with GDXJ. You have the 200-day there at 35, confluence of support there. So we get some more selling this week. That could potentially set up a better rally, more of a rebound beyond just a couple of days in the miners. And I don't know, maybe that coincides with gold bouncing from 1900 or even 1880. SILJ rallied up to the 200-day, so you have resistance there at the 200-day. You also have support right around 950 and just below it, so kind of in a tight range there. So there you go. I mean, potentially we could have the setup here where you probably, just thinking out loud, maybe as a short-term trader, you want to fade the move over the next week or so. And I say that because if the miners trade lower here, they're going to be coming down to stronger support. And then they could see a decent rally from there, but from lower prices. And at the same time, not at the same time, in the other scenario, you get an immediate or more of an immediate rally here, and you see GDX, trade up to 33. You see GDXJ trade up to, 38, 39. You see that happen this week or in the next, 5-7 trading days. Then that's your short-term rally, and the miners aren't oversold anymore. So I'm just thinking about loud about the potential scenarios. To me, the big development is, you have this breakout in the stock market, and that's what it comes down to for precious metals over the medium term. Because you have a stronger stock market, you're going to have stronger bond yields in the very short term and a stronger dollar. However, at some point, if that rally fades, which I think it will, it's just a matter of timing, if and when that rally fades and rolls over, we get closer and closer to a recession. That's the point when precious metals probably bottom, start to move back up. And again, it's just a question of timing. Is it 3-4 months away, 5 months away, or is it 1 or 2 months away? At this point, I don't know. I think, nobody does. It's a tough call, but as always, we'll analyze it the best we can moving forward. Thank you so much for tuning in. Let me know what you think in the comments, and I'll talk to you guys again in the next video.